Guess what day it is? It's Friday Coffee with your mortgage man, Eric. And here we go. Today we're going to talk about interest rates and why interest rates for the majority are really irrelevant, especially when it comes to an 1/8 to 1/4% difference when you're shopping around for a home loan. Just stop. And I'm going to tell you why. Look, there's many different reasons why, but I'm going to focus more on the numbers. I'm going to give you an illustration. And let's dive into this, kind of get into the weeds of it. I know a lot of people have heard this term, well, the mortgage payment is all front end loaded with interest. And people, yeah, I know that. But do you really know what it means? I don't know. So I'm going to give you an example, okay? So here is a mortgage statement. And this client, I've blackened out their names, right, and redacted all the information, so this is private. But here is an example of a mortgage statement, and this client was at a rate of 4% and about 2.5 years in on their mortgage, okay? So they got about $172,000 balance on their mortgage. Let's focus in over here, okay? Their total principal and interest a month is $883. I'm not sure if that's focusing or not. Okay. If you can see how much is going to principal and how much is going to interest, I'm not sure if that is focusing. I'm just going to read it to you. Okay. So $358 a month is going to principal and $574 a month is going to interest. Did you hear me? $883 a month payment and $574 a month is going to interest. What does that mean? That means this. This client right here for this month just paid 103% interest on the monies that they borrowed. Did you hear me? 103, not 4. They didn't pay 4% on the mortgage. They paid 103% this month on their mortgage payment. That's ridiculous, isn't it? If I were to offer you a loan, and if I were to offer you a personal loan as a friend, and I'd say, hey, I'm going to charge you 100% interest on this. Is that okay with you? You'd tell me to pound sand. So now check out the numbers. How long does the average mortgage holder keep their home loan? It's about 8 years. Used to be 6.8. It moved upwards. We're around 8 years right now before somebody is refinancing or paying off their loan, right? Moving, getting another home loan. It's about 8 years. So do they really hold their mortgage for 30 years to 360 months? No. And the only way that you will truly get the interest rate that you elected to get, you locked into at the beginning of the home loan, is if you keep it for 360 months because it is so front end loaded. 103% interest. This is a perfect example. 103% interest that person paid this month on their mortgage payment. It's ludicrous. Now, let me give you a story on how this can really affect you when you're home shopping because you get fixated on the interest rate. And I got to say, look, this is where I think it's the Allstate commercial, right, where they say, oh, discounted insurance companies give discounted coverage. It's the same way. Because look, you can keep digging online and finding them internet companies that are based in Massachusetts, right? And we're in Arizona, and they're going to give you yet another 8% lower on the interest rate. And here's where the rubber meets the road, or where the disconnect is that they're probably not going to get your loan across the finish line. And if they do get it across the finish line, it's going to be late, and you're going to have a horrifying experience. Okay? True story, this happened last week. Had a client that was referred to me from a real estate agent, one of my agents that I work with. And she's contemplating going through Navy Federal Credit Union. Now, Navy Federal Credit Union, they have some good rates. Their rate was about 1/8% better than mine, okay? But here's what she couldn't get done. Because Navy Federal, if you're familiar with the terminology, is called vanilla. They're a vanilla lender. They're in the box. They don't do FHA loans. They do VA, and they do conventional loans only, and they have overlays. In other words, they don't truly underwrite to the guidelines. They've created their own guidelines, more restrictive. So this lady, currently living in a home, and she wanted to rent out her home and move to another home, okay? Navy Federal said, no, you can't do that. If you want to use the rent that you're going to, on the home that you're going to leave, you can't. You've got to actually have 2 years experience as a renter, as a landlord, before we can allow you to use the rental income. That is called an overlay. I can do that all day long. Told the lady, I can make this transaction happen for you. She wanted to make an offer on this home, and it's so bad, but she was hung up that Navy Federal was going to, give her a lower interest rate, an eighth lower on the interest rate. So she wanted me to do the pre-qualification, and then me to allow her to skip the Navy Federal later on down the road if she could sell the home, which is shady. If you're following me there, very shady that what she was thinking and doing. I said, absolutely not. You're not allowed to do that. Once you pick a lender, you have to stick with the lender throughout the transaction. It's part of your due diligence before you get into contract. And I tried to explain to her, this is what happens when you make an offer on a home. Another illustration, there's referred to as a pre-qualification form that is being given. Okay. Not a pre-approval letter from a bank with their fancy letterhead, a pre-qualification form. The state of Arizona makes it mandatory that this form has to be given as part of the purchase contract. No, that's not true. Yes, it is. Here's the purchase contract. Page 2 of the Arizona Real Estate Purchase Contract says it right here. Right there. What line item is that? 69. The pre-qualification form has to be part of the contract and submitted at the time of offer. So your bank, your Chases, and your B of A's, and your internet lenders, they don't have these forms, okay? And that's why realtors are reluctant to accept offers when you have an offer coming to the table that you're being represented by one of these institutions, because they know how difficult it is. You're in breach of the contract on day one because you can't supply a pre-qualification form. Now, back to the story. So this lady called me back and she tried to plead her case to me a second time. She said, well, if I go through Navy Federal, they're going to take a week to do my pre-approval. How soon could you do it? I said, I can have it done today. We could spend another 20 minutes on the phone. I can have your pre-approval done today. You're going to have to send me your documentation, though, so I can get the pre-qualification form out, because I have to review your documentation. Part of what we're supposed to be doing. And she did not do that. She was hung up on 1/8%, decided to go through Navy Federal to get her pre-qualification. Guess what happened? Can you guess what happened? That's Phoenix, Arizona. It's a hot market. The home sold. Yep. By the time she got her pre-qualification done this week from Navy Federal, the home was under contract. So she lost the home that she loved and wanted for over 1/8% in an interest rate, which equates to about 3.5 lattes at Starbucks each month. And it's an irrelevant topic, because how long is she truly going to have that mortgage? And the lady's 68 years of age, okay? Is she going to have that mortgage for 30 years? Highly unlikely she's going to have that mortgage, because what's probably going to happen at some point down the road, she's going to sell her other home, her rental property. It's probably going to end up paying this one off, or it's going to go into a reverse mortgage. So, and I had this conversation. I said, do you understand that the 1/8% is really an irrelevant topic, because it's all front-end loaded on interest? Yes, I know that, but they're just, they're going to give me a little bit lower rate. Oh, are you kidding me? You know that it's irrelevant, but you are hung up on this 1/8% interest rate. Now, I'm going to go to another area that's a sensitive area here. Lenders that are selling themselves on just rate is dangerous. Run as quickly as you can from lenders that all they have to do is sell the lowest rates on the market. Well, I got the lowest interest rates. Nobody can touch my interest rates. And it doesn't matter, because I can go on the internet and find you a lower interest rate as well, and I'll be handing you over to the wolves, because you're not going to get across the finish line, and if you do, it's going to be a train wreck. You'll be late, per diem penalty fees. You're going to have agents upset and ticked off to no end. and it's not how you want to spend because you wanted to save an eighth or a 1/4% on interest rate so you can get yourself an extra 3.5 lattes each month at Starbucks. So, what I'm trying to drive home here, interest rates are kind of irrelevant. Picking the right lender that you are most comfortable with, usually from a referral, is highly important. Your realtor who is referring you to go through a certain lender, know that this lender is going to get it done. They're going to close on time or beforehand. They're going to give you a great experience, a fantastic level of service, and are going to be able to come up with the needed Arizona forms so that everybody is in compliance within the contract. Okay? So keep that's what we're trying to drive home here. And if you hear of any lender touting that they have the lowest rates, right, and that's it, run, because it's the same thing like with Allstate. If you're going to go with discounted insurance, you're going to get discounted coverage. And the same thing applies in the mortgage industry. If you want to go with the lowest interest rate possible, then you're going to go with the lowest service that's possible, okay? With that said, it's Friday Coffee with your mortgage man, Eric, 602-757-2171.